Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. My name is Ben Maldonado, and as always, I'm here with my partner, Barrie Hederachi. How are you, Barrie?
Doing really well.
Yeah, after the week you had, I can understand. Good trades, good two-way action, a lot of volatility. Your kind of market, right?
And worn out.
That
Can't
is
do it
the
like I
truth.
used to. Man. Just
No,
it's a lot of work.
a lot of work, a lot of adrenaline, and by Friday evening, man, I'm wiped out.
But it's
But
good. It's good. We needed this. So
yeah,
good.
absolutely. Looking at the charts this morning, Barry and I were just talking before we started recording. Looking at the charts, man, it's exciting because there's action is coming. The charts are telling us, and let's just dive right into it and start going over everything. Our proxy for the animal spirits of risk is Bitcoin. And so every week we start the show with Bitcoin. So this week we'll do it as well. And Barry, even though we're seeing risk off in other areas of the market, man, Bitcoin looks bullish. They attacked this, the full square support here in this 41,000 area, and they just couldn't get under it. I mean, you see multiple days, multiple attacks, and then we get this bar up. I'm not in the camp of saying, hey, it's going to 1 million by the end of the year or anything, but the weight of evidence right now is a push higher that we should at least, test this half square here in this 50,700 range.
Yeah, my money's on the half square at most.
Right.
And to the downside, I don't know what that lowest spike bar low is, but I think if 39 goes, we're going to probably go lower. So that's sort of the bracket I'm watching.
Makes sense. 39.6 was the spike low. So
right in there, that quarter line.
And another interesting thing on this show, I want to try and bring up the games that these big boys play. They pulled it down right to the eighth square and then reversed it.
Exactly.
Right? See how they pushed it? They pushed it, get everybody getting bearish and short, and then they run it the other way. So you can, if you look at the charts and you really study them, you can sort of see these games that the people that have enough money to push the market around really play. And there's one of them, right? Push down, then go the other way.
Yeah.
Anyway, let's dive into the big five with you, and then we'll come back and hit a bunch of commodities that are looking like they're ready to be active.
Sounds good.
There's the E-mini.
That's right. So on the show last week, we talked about 44.72 to 75, I believe, was the zone to watch. And if we can't penetrate through that and look for a down leg, and we're more or less, we got the down leg. So that part is done.
Great call.
Thanks. So now it's really about figuring out, the path forward, so to speak. And chart. Okay. So as you can see, we almost came down 36 degrees down on the square 72. Mm-hmm. So to me, that sort of shows it could have been some kind of a completion for now, temporarily, right?
Which accounts for the bounce we saw on Friday, right? That they completed something on a short-term basis.
Exactly. Got that huge rip going into the close. Mm-hmm. So for next week, I'm kind of looking at a couple of different levels, because you got to have the levels to figure out if your forecasting is, if your forecast is going in the right direction or not. And what I have is, I'm using 42.90 as support for any kind of a retest. Being that if 42.90 goes, we're probably going to go a lot lower, and it's just going to continue. And to the upside, I have 43.60. And that's going to be sort of my balance point for next week. And let me explain that. So we have 42.90 as as support for any kind of a retest. And then 4360 is really my resistance, but I'm looking at that as a balance point, in that if we can get above that and hang above it. And when I say get above it, I'm talking, let's say 4-hour basis or so, and we make some air above it, meaning price gets above, we have a bar that's fully above it, and it's looks like we stabilized there. Then I think we're going to probably move higher into the end of the week. I'm reading it as a sort of a counter trend leg up, with 4424 being major resistance. And if that 4424 gets taken out, then I think we're back in bull territory, and we might have another entire leg back up again.
Mm-hmm.
So that's sort of how I'm treating those three levels. What do you think? Was that clear?
Yeah, I like the idea of where you change your view based upon certain levels being cleared. And I mean, that's kind of how we operate, which is you have a bias based on, you know, where price is, you have probabilities based on that. But when price moves and changes, your probabilities have to change.
Exactly. So those are the three levels, and I'll put those up on the spreadsheet that's attached in the description for the video. And speaking of the video, if you guys like what we're doing, what we're talking about, please like the videos and share them and subscribe. That'll let us know to do more and be more involved with the production process. Isn't that right, Ben?
For sure.
So that's CES, keeping it fairly simple, looking for a bounce. And those are the levels where we change our the projections.
So Barry, just to be clear, when that 4290, if that gets taken out to the downside, then the probabilities go way up that we're in sort of a wave 3 down, that we're catching the big wave.
Not only wave 3, I think we're in for, you know, maybe an entire month of downside.
Right.
So it's kind of a bold thing to say, but I'm just saying that low should hold at this point. If it doesn't, I think we got a whole nother thing coming. So
yeah, I'm with you. And I'll show just briefly, I'll look at the monthlies on the NQ and the ES, and it kind of confirms what you're seeing. Okay, great, good.
That said, let's take a quick look at the weekly. And I remember looking at this, you know, just a few weeks ago, we talked about, hey, you know, when this trend line breaks, it's going to be epic and all this. And that it was going to break. If this leg was going to finish, it's going to finish around the 144, right?
And there it is.
And yeah, it got up a little bit, and you know, this is just how markets work, and then eventually drop back below the key level here. So my take is still the same, you know, on the weekly basis, as long as we're under this 4490 area, it says 4488, but figure just to round it off, 4490 area, we're still on, you know, sort of weak footing. We can have strong corrections and things, but just on the bigger picture, just to keep an eye on that 4490 is the key level that we have to sort of cross on the weekly basis. All right, let's go on to bonds, which had a hell of a week.
Yep.
And last week we talked about this, you know, if we take out 62.08, and we've had these levels up here for weeks, I think 62.08, that we're probably going to visit 59 with ease. And pretty much that's what happened. You know, we broke it, came right down to 59, which is our support, that big purple line. And so we're getting a little bounce off of that. And for bonds also not out of the woods. So I think, look, you know, long as we're below 62, it's on a weak footing. And if we take out 59 next time, you know, we had like a couple of 3 lows here, just really, really pushing it, and it was supported. And we also have a little bit of a trend line still hanging in there. But if this 59 goes, you know, I'm thinking new lows over time, maybe not in a week, but certainly we're going to go down and test the lows from last March. So just keep that in mind. This is the kind of the setup we're in. And
I think the interesting thing about your chart too, Barry, is look at how sort of muted the price action was when we were in the box. As soon as we broke out of the box, you got a big trending market.
yeah, yeah. And this is just the first counter trend after the break, right? So
Yep.
we really got to watch this. They could, it's one of those places where all hell could break loose if this 59 goes. But I'm looking at this at the short side, long as on the short term signals and whatnot, long as we're below 62.
I'm with you. I'm going to talk about and look at the 30-year. It's set up for a short. There's another push coming.
Mm-hmm.
So
the reason I said it's sort of in counter trend mode is on a basis of this weekly square. We, last week I think we talked about it. Hey, if this breaks, we're probably going to go and test the half square, which we did exactly, and also the lower trend line, and we got a little bit of bounce off of it. And like I said earlier, we're not exactly out of the woods here on this, but just to know that we're on support. And how I read that is if that support goes, then we got a whole nother level opening up below. And that's the key. That's why we watch those levels like the 159 on the daily. So that's why if this 59 goes, then it opens up this entire level down below. And so we'll just leave it at that. We're still watching the same two levels. And let's move on to look at crude. And last week we left it off at, where did we leave it off? Well, we had that target at the ABC target coming up here. And we talked about that being possibly a first level of resistance, and also the old high that we've been talking about for weeks. That mark, crude's gonna go up and test at least the old low and eventually get to 79.80 area. And I'm still holding the same thought, especially since it held the consolidation so well, right? It's a very tight consolidation. Really didn't even go back and test the old high from September 15th. So it's in good shape. And we take out last week's high. I think 79's definitely within reach. Yeah,
it looks bullish. I mean, we've been bullish on it. It continues to look bullish. It's bid.
Looks bullish, and we're using 73 as, now that we were using 69 for a while till we broke out of it, and now if you guys need a sort of a level for next week, I would say look at 73 as a sort of a minor balance point and look for support to hold that. Look for that level to hold any kind of a pullback. So long as we're above that 73, we're good. And you can see the stepwise idea that we talked about. Earlier it was 60, and then we got through 67, 69, now 73. And next we're looking at 79, and that's sort of how we use the levels. To give you a good running example. And the weekly crude, we have a full 72 up above. It's right around 79.
Yep.
So that's kind of where we got the larger picture, and it's been heading that way. So not much to do. It ain't broken. Don't have to fix anything.
Yep.
Moving on to gold, last week, the week before, we've had these numbers. 1789 was the key level, key resistance, and we talked about how if it won't be able to take it out last week, that we're probably going to go back and test the half square, which we did. And for next week, I think this 17. I'm going to change this number just so that we have a. Let me put a new level in here. So 1765 is the key level to watch next week as a balance point. and which happens to be the high we were banging up against last week. So if we can take out 1765, I think gold is back on a bullish footing again. But if we can't take 1765 out, I think we could easily go back and visit 1700. So that's the split.
Yeah, I'm not going to talk about either gold and silver, but they're like various commodities, they're correcting, right? They're still correcting. They're hammering out their bottoms. They're kind of, searching in the dark for that low that's going to then turn it around. And it could happen this week. It could happen next week, but there's just not enough evidence yet to say, hey, we really want to focus on this market.
Yeah. And in the meantime, we want to watch the levels to see, how the progress is. So right now, we came back to test the half square, got a little under it. And which, when market comes to a square and it gets under it a little bit versus holding a little bit above it, it just it's a good sign of strength or weakness, internal strength or weakness. So anyway, 1765 as the key balance point for next week. Take a quick look at the weekly. Again, here we have 1767 as the quarter level. So again, our box was that we drew up a couple of weeks ago. We're at the bottom of it now. We broke through it, coming back through to kiss it. So critical point, if we don't get above this, it's a good chance that we go back down and check these other lows. So keep your eyes open on that. Moving on to the dollar. Again, we've been bullish on the dollar and looking at 95 being a decent target. Or was it 94? No, 95, wasn't it? It's a half square.
Yeah.
So, and we did fairly well. Then the only thing I noticed is we also did a nice 90-day move. And normally after 90 days, going right pretty much up into the target, you want to, it's normal that we pull back. So next week, I'm watching to see if the dollar is going to continue its strength without a whole lot of drama in a consolidation. I think the 93.70 is the key level to hold next week. And if we can hold above that, I think 95 is just a couple of steps away. If we take out 93.70, I'm expecting a little bit more drawn out of a consolidation or sideways. And we do have a channel drawn in here that should be working into the next few, I'm thinking weeks, maybe even months. So yeah, 93.70 to hold next week or not. Looking at the weekly dollar, this, so I guess 94, 93 and a half, 94 was the level we were looking for a breakout on a weekly basis. Again, maybe that's where I got the 93.70. So 93.70 happens to be the half square on the weekly. So this is why it's important. If we can hold above this on any kind of a correction consolidation, then, hey, it opens up this entire next level, which is a hell of a lot. We'll see how we manage through that. But the key level for next week that we're watching is this 93.70 to hold. And if it does, then, focus on the long side. And the last would be the euro. And we had our support line around 1680. And we talked about how if that goes, we're probably going to test the lower bounds. And 15, I don't know if I popped this in last week, but 15, I think it was last week. So this 1560 was a support area we were looking for last week, and
right to it.
Price came right to it. Well, Ben, with all these numbers we're hitting pretty much on target, you'd think we'd have a lot more viewers, right? Honestly. Good thing we're doing this for fun, right?
Right, exactly.
But it's good. That's a good thing to do. It's fun to do. Anyway, so euro came down to our level that we had drawn out. And dollar pretty much went to resistance and that 90-day run. So I'm thinking that we're probably going to consolidate or pull back a little bit. And the length of that pullback or the consolidation is going to tell us how strong this is. So you can see here's the mirror move on the euro. We had a 90-day correction off that lower high.
Mm-hmm.
And so it's normal to expect some kind of I have to look, and next week we can talk about if this actually finished the leg or not.
Mm-hmm.
But for now, we're looking, for at least a euro to go back and test these, test the next level up, which is around 1690, basically this dotted line right there. So maybe I'll drop a line on 1690.
Mm-hmm. Yeah, this coming week either is going to be an acceleration point or a counter trend for most of these markets.
Yeah, some of these looks like we're going to counter trend at least for a few days, and then we'll have to figure out how it handles the other end of it.
And we have a decent cycle hit too early in the week, so I'm very interested to see how things go in and out of that.
Mm-hmm. And here's the weekly, and there's that key level we were watching all these last few months.
Mm-hmm.
And eventually, hammer, and finally we broke through, and didn't quite get to the half square, which is around 1520. But on a weekly basis, well, here we are. Now the key thing is, if you guys can see this little gray trend line, it's really to go up and test that, which is around 1675 on a weekly basis.
Mm-hmm.
So that line right there. All right, I think that covers what I wanted to talk about.
Excellent.
Put it back to you, cover the commodities, and my goodness, there's a lot of stuff going on there. So
absolutely.
There you go. Talk about rockets.
The rocket we've been watching and riding. Mm-hmm. Well, this is a monthly. Normally when Barrie throws it back to me, I go over the dailies and NQ and anything else. And then once a month, I'll do a monthly review, which I'll do next week. I just wanted to show a couple monthlies because I think it's extremely important, the message we're getting from the monthly charts on NQ and ES right now. This is NQ. As you can see, we got a new monthly bar that started on Friday. But the important thing is the last bar went right into resistance on the full square at the high, and then did an outside reversal on a monthly basis. And what that means is we made a new high and closed below the low of the previous month's bar. Not a bullish signal. It doesn't mean that this is going to be the all-time high. We won't see it for, new high for 10 years or 20 years or anything like that. But what it tells me is that's a significant high. And there's a lot of work that needs to be done to clean up that mess that was created when you did that outside reversal bar. We also broke the steep trend line. So it adds to the weight of evidence of what we're seeing on the dailies and the price action we're seeing, that something has changed. It's not the same market that's going to be going straight up with really shallow pullbacks. Maybe we get really strong two-way action without, crashing down to new lows. It's something to pay attention to. Anything else you got to add to the NQ monthly, Barrie?
Well, it kind of reflects the S&P in that last few weeks we've been talking about, we could have a potential high in place, meaning that we could have a meaningful down leg, like a bear leg, instead of a correction or a dip that we're used to. Mm-hmm. And which means, we could be down for more than a week, right? We could be down for a month or a few months or 90 days. So when monthlies hit levels like this, we have to keep that in mind and not just jump right back in and think there's no risk. So I think these are the times to pay attention. So here we are.
Absolutely. And let's look at ES and see what the cousin of NQ was doing. Well, we made a high into a half square, which, as we know, is another decision point. Could be either support or resistance. In this case, it's resistance. And the same thing. We have a outside reversal bar on a monthly basis. So both ES and NQ are sending the same signal that it's time to be a little cautious. It's time to open up the possibilities of a two-way market. And I think price action for the last 2-3 weeks has reflected that. And hopefully everybody's adjusting to that. And you have to change your strategy when, buying any little dip was rewarded over the summer. May not work out so well right now with the same strategy. When the market changes, your strategy has to change. So for ES and NQ, I wanted to show these monthly patterns and these monthly bars because they're significant and worthy of taking notice. Let's jump over to the commodities. We're going to start first with the grains. As we've been talking on this show for weeks, the strongest of the grains has been wheat, and it's basically been a sideways correction since May, whereas the other two, soybeans and corn, have had decent pullbacks with much stronger downside price action. This one's been sideways. Thursday and Friday, we saw a really strong reaction upward based on grains supplies and grain inventory reports. So the price action we were seeing beforehand was basically showing that people wanted to own this. People wanted to own this. There were higher lows and higher highs. They couldn't take it down and take out the July low. And here we're starting to get the breakout. Wheat looks very strong. All the levels on all the commodities are updated on the spreadsheet, which will, the link will be posted with the video and we'll post it on Twitter. But wheat looks really good going forward. Anything you have to add on wheat, Barrie?
No, other than to watch the levels, watch the full square, that level that we just broke up, and watch the pullbacks. That's it.
Yeah, it looks good.
And, really watch out if we take out that high from a couple of months ago.
Yeah, this thing will fly. Next one we want to look at is corn. Corn, you can see from the price pattern, has not been a sideways correction. It's actually been a correction that's pulled back to a previous area of highs and congestion. But we're starting to see positive price action here, right? We took out this low, couldn't hold it, went back up. Now we're back above the full square. So I think corn is also looking bullish. It's not as bullish as wheat, but it is looking bullish. There's signs of accumulation, and corn is one we want to watch closely. If you don't have a position in it, it appears to be turning, and the next leg higher in corn is starting. The last one we're going to look at is beans, and beans is a little further behind the other two. It's still trying and probing to find its bottom. You can see the pattern is kind of similar to corn, but it hasn't been able to make that turn and start making higher lows and higher highs yet. So this is the laggard of the group. Interestingly enough, we found a low right on a full square on Friday, which is a good sign. If we can hold this square, it can maybe build a platform to break through this downtrend line and then work its way towards the bigger downtrend line. So there's no urgency in beans right now, but I just wanted to put it up there to show sort of three different phases: wheat being the furthest along and the strongest, corn being sort of in the middle, having made a turn and starting to put in a bottom, and beans, we're still searching for the bottom. But again, once we do find the bottom there, from a bigger picture standpoint, which we'll review next week on all the monthlies, there appears to be, for the grains, at least one more major move on a higher time frame higher. Anything to add on beans? I know we were talking about beans this week, Barrie. Anything else you want to add to that?
Yeah, it's just being patient and waiting to see where support comes in. I mean, this square is one, and it could certainly go another 8 lower or whatnot. So we're just watching the levels, and we'll pick it up at some point.
Absolutely. Let's move over to crude oil. Barry's already talked about crude. just wanted to show you the look on crude that I have. We're very bullish on crude. We were bullish at the turn here when we did a nice ABC down into a full square and then immediately turned out. We've been bullish on crude, and it keeps, as Barrie mentioned, it keeps stair stepping above levels, right? It gets to this level, this full square, pauses a little bit, pops above it, pulls back, tests it. Now we're going up and doing the same sort of action at this half square. So crude looks good. As Barrie said, 80 seems to be in the cards, and then 85, 90. Higher prices look good on crude from a bigger picture standpoint. So crude is one that we continue to be very bullish on. Natural gas that we've been talking about for months continues to be in a correction. It's not ready for the next move up yet, in my opinion. So I'm not going to spend any time on natural gas, but bigger picture, still very bullish on natural gas. The group that looks the most bullish now is the softs and the commodities. A couple weeks ago, when Barrie and I were talking in the middle of the day, I mentioned, man, money's coming in there. Someone wants to own these. I can see any weaknesses getting bought up, and it started playing out last week. On the spreadsheet, we were saying, hey, the consolidations look over, the next move is coming, breakouts are coming. And we started getting that this week. And I wanted to review those charts with you because they look very, very good. Let's start with coffee. Mm-hmm. Coffee had this major move up in the summer that we caught. Then it began this sort of pullback and correction, a nicely formed triangle. We broke out of the triangle late last week, and now we're seeing the power move up that's coming once the triangle breaks. The triangle points to a target around 235, which would be up just above this full square. That's at about 232. So up in this area, it looks like we're starting the move to head up there. The key thing, again, when you're looking at this, is the whole correction and the whole triangle formed above the half square and above these previous highs. It was a very, very bullish triangle. So it was just a matter of being patient, waiting for the breakout to occur, and then getting involved. And so coffee looks really good. That move on Friday sort of is confirming that money's coming into it. What are your thoughts on coffee, Barrie?
Well, I think, we broke the triangle, and that's all I have to know.
Right.
Let's see. It's doing fine. I think we might get a little bit of a correction before we get the high, take out the high. But I think breaking out, the breakout so far looks very good.
Yeah, very bullish.
Yeah.
Let's go to the next one, which is sugar. Sugar has been in a bullish trend for well over a year now, and it continues to sort of make progress. As you can see the way these things move, there's a fast move up, there's a consolidation, sometimes a pullback, and then they move up to the next level, consolidation, next level, consolidation. Well, sugar's in one of those consolidation phases while it keeps probing this half square, around the 25-30 area. So there's a couple ways to play it. If you're not involved, you wait for a pullback into this support area in here, this full square, or back into these lows here, or you play the breakout. We get above this half square. The next area that it's going to go to is the full square, which is up, in the 21.25, 21.30 range. But this is a nice steady uptrend with these intermittent corrections. And it's just, as long as it keeps doing that, it's bullish. And bigger picture, it's still very, very bullish. Again, next week we'll go over those. The star last week was cotton. We talked about cotton on last week's show.
Talked about the breakout.
We talked about the breakout. We talked about months ago, we talked about this triangle, how when the triangle broke, it was very bullish. And this is what happens, right? one of the things I want you to notice though is, and this is something that happens in almost every market, especially the commodity markets. It went up here, made a high on the full square, and then it started, just sort of consolidating, one big bar down, clean out everybody who had their stops in here. And anybody who was worried about, these highs being pulled back, it pulled back a full eighth off the half square, and then it doesn't let you back in, right? Every single bar is straight up. Now, the lesson is, if the bigger picture is bullish, the structure is bullish, you can't have a stop super tight on these things because they'll clean you out. They will take you out, and you miss this kind of move. The other thing that it's interesting to see is we had the breakout here at this 96 level, and we went level to level, square to square. I do think something finished up here on a daily basis. We probably are going to have to pull back and correct. Maybe it's sideways like this. Maybe it's an actual pullback like this. But we're watching for places to re-enter because the bigger picture, monthly, weekly, still very bullish on cotton.
Also because it's at a whole new level, whole nother square.
Mm-hmm. So it is a bullish market. These are the kind of moves you want to catch. Again, you don't have to catch many of these in a year to make your year. Especially if you're using leveraged products like futures and options. So we try to find the markets that are, and alert you guys to the markets that are ready to move, that have a possibility, higher probability of moving. And that was the call on cotton last week, and why we point out the markets that we do. So this was the best performing one of the week. There's another one that we feel has potential to do something similar, and that's cocoa. Cocoa has been sideways for a long time. You can see this wide range. If you just use this square, it's basically been bouncing in this square for over a year and a half, with some forays out, a little bit here, a little bit there, a little more here, a little more here.
Little flushing everywhere.
That's right. As if you notice, they flush right before they make a move in the opposite direction. That's a pattern that's in all markets, ES, bonds, commodities. Anyway, so here, what the interesting thing is, we're starting to make these pushes up, and now beginning the pullbacks are holding this half square. We had a pullback in September, held the half square, went back up and tested the full square, pulled back again, hold the half square. Big move up on Friday, stopped at the full square. Cocoa looks to be ready to do a move where it's either going to pull back, test here, do a flush move, maybe even take out these lows. But the big move is coming on the upside here. Does it happen Monday that it takes this out, gaps up and goes? It's possible. But we're watching for an entry, either the breakout and a retest, or a pullback, getting in with a good risk reward, and you take the shot that the breakout's coming. On a monthly basis, which again we'll review next week, we are right up against a 6-year trend line. These are explosive moves when they break out. Cocoa looks to be one of the markets that's setting up for that type of breakout. I know you've been really interested in cocoa and really on top of it. Anything else you have to add for cocoa, Barrie?
Well, no, I think you covered it. Basically, watch the breakout up here. Once it gets into the next square, there's plenty to run. So that's how we play all these commodities, and no different here.
Yeah, and as I was saying, that's the last market I'm going to review this week. The key thing is the charts are telling us and telling me that a lot of activity is coming. Things are setting up. The moves are very explosive. If you're on top of it and you use the levels, there's really good risk reward setups that are happening. And, you don't get this all the time. As you know, we were lamenting over the summer, the terrible price action in a lot of different markets. Well, we're getting the opposite now. Things are moving, volatility's up. And when that happens, as a trader, you have to make your money in those time frames, because if you try to make it in the other ones, you generally give it back because you get chopped up.
That's right.
So take advantage of what's happening. Take advantage of the markets. Look at the levels on the spreadsheet and make yourself some money. That's the goal. Anything else you got for this week, Barry? I know we have the timing early this week that we're looking at cycle wise. We got a good cycle hit. We want to watch the effects of that. Anything else you got to add for this week?
Nothing to add. I think we did a pretty tight coverage. So we'll see everybody next week.
Yeah. Best of luck, everybody, and this week, and we'll talk to you next week.
Thanks, Ben.
All right. Take care.